Welcome back to Investing Talk Podcast. Today, we're really zeroing in on an event a lot of people are watching, GAP upcoming earnings to watch. Can this retail giant keep surprising the market? Or, well, are there maybe some hidden challenges lurking? We've gathered the latest info, analyst views, and importantly, pointed out what's missing to give you a really informed picture. Our mission, like always, is helping you cut through all that noise and get up to speed quickly. And before we jump into the numbers, just a quick moment. We'd love your support. If you find these insights valuable, maybe consider subscribing, liking, or leaving us a comment. Your engagement, it honestly helps us reach more listeners like you. Oh, and if there's a specific company you want us to look into next time, just drop it in the comments. We really do read those. Okay, so let's get into it. GAP. When exactly can we expect these latest numbers? Knowing the timing is always, step one.
Right, the timing is confirmed, and that's pretty key. GAP is set to report its Q2 fiscal 2025 earnings on Thursday, August 28th, 2025. The press release should hit around 1:15 p.m. Pacific time, and then the conference call follows at 2 p.m. Pacific. So it's all happening after the market closes. Gives everyone a bit of time to digest it before trading starts again.
Okay, August 28th after the bell. Got it. That's locked down. But what everyone really wants to know is, what are the expectations? What are analysts thinking for revenue? And maybe even more important, that bottom line, earnings per share. That's often the big mover, right?
Absolutely. EPS is usually where the spotlight shines brightest. For Q2 fiscal 25, the analyst consensus is actually in a pretty tight range. We're looking at between 54 and 55 cents per share. So yeah, 54 to 55 cents. We've seen slight variations, like public.com is leaning towards Seattle's 54 cents, Zacks is at 55 cents. Now, revenue, that's a bit more interesting. A specific consensus number hasn't really been published in the stuff we review.
Oh, really? No revenue target?
Not an explicit one, no. But, looking at the EPS expectations, it kind of implies the street is thinking modest year-over-year growth. So maybe a small uptick on the top line, but nothing concrete to hang our hats on there.
Interesting. So an EPS range, 54 cents of 55, that's something. But what about those whisper numbers, the unofficial ones that sometimes circulate? And has GEP itself given any kind of guidance? Did they hint at anything for Q2?
Yeah, that's a great question. What else is out there? Our sources are saying there's no verified whisper EPS number floating around right now.
None at all.
Nope. Which could mean anything, really. Maybe they're keeping things tighter. Maybe it's just quiet. And crucially, when GP announced the reporting date, they didn't give any actual numbers. No quantitative guidance for Q2. So we're basically left relying purely on that external analyst consensus we just talked about. The company's definitely keeping its cards close to the chest this time. Adds a bit of mystery, doesn't it?
It does. Okay, so looking ahead often means looking back first, right? Checking the rearview mirror. How has GAP actually done in recent quarters, specifically with earnings surprises? Did they beat? Did they miss?
Right, context is key. If we look at their most recent quarter, that was Q1 fiscal 25, announced back on May 30th, 2024, they actually had a positive surprise then. Reported EPS came in at 51 cents.
51 cents, and what was expected?
The estimate was around over 45 cents. Zacks actually had the estimate slightly lower at $0.44. So compared to that $0.44, the $0.51 they delivered was a positive surprise of almost 16%. 15.91% to be exact.
Wow, nearly 16%. That's pretty significant.
It is. It suggests, maybe they're managing costs well, or maybe the product mix is working better than expected. Important stuff for a retailer.
That's a solid beat for sure. Does that point to a bigger trend in profitability? Are we seeing consistent improvement there, or was Q1 maybe just a one-off good quarter?
Well, it definitely suggests some positive momentum, at least based on Q1. That $1.51 EPS was a clear improvement from the $1.41 they reported in Q1 of the prior year.
Okay, so year-over-year growth too.
Exactly, which points towards better margins or overall profitability improvement. That's a good sign. But, and this is important, the sources we have don't really break down how they did that. No details on gross margin trends or how specific brands like Old Navy or Banana Republic performed.
Ah, okay. So the why is a bit fuzzy.
Yeah, we see the positive result, but not the specific drivers within the business from this data.
Got it. And the million-dollar question for many listeners, how did the stock react after those previous earnings? Did that Q1 beat lead to a big pop, or was it more muted? What's the history there?
Yeah, that's always what people want to know.
Yeah.
Unfortunately, the source material we looked at just doesn't specify the post-earnings price action. Not for Q1, not for the last 4 quarters.
Really? That data's missing.
Yeah, it's just not in the citations provided.
Yeah.
So while we know they beat, we don't know from this info how the market actually traded it immediately after. It's definitely one of those missing pieces you'd love to have.
Hmm. Okay. It really sounds like we have some solid points like the timing and that Q1 beat, but also some pretty big gaps in the picture. Feels a bit foggy. So, beyond just scheduling their earnings call, what else has been going on with GAP this past quarter? Any major news? And what about the bigger picture, like retail trends, the economy, stuff that's not in our specific sources?
Right. The broader context is super important. And honestly, corporate communications from GAP this quarter seem to have been mostly just about scheduling the Q2 results.
Yeah.
The date, the time. There weren't really any major operational updates or big news announcements detailed in the materials we reviewed. Pretty quiet, actually.
Just logistics, basically.
Pretty much. Which, again, could mean things are steady or just quiet.
Mm-hmm.
And to your other point, the sources we have don't really get into those broader sector trends, things like, overall consumer spending, impact of inflation, how the apparel market is doing generally. That's not detailed here. We also don't see specific analyst upgrades or downgrades, just that general EPS consensus we talked about.
And technicals.
Yeah, that's another big gap. No info here on pre-earnings, price action, key support or resistance levels traders are watching. And crucially, no implied volatility from the options market.
Which tells us how much movement the market expects, right?
Exactly. Without that, it's harder to gauge the expected reaction size. All these missing pieces, they really do limit the view, add to the uncertainty.
Okay. So, given what we do know, the timing, the EPS range, the Q1 beat, and factoring in all that missing info, how might this play out? Let's try to paint some pictures. What's the bullish case for GAP here? What would good look like?
Okay, let's game it out. The bullish scenario. Ideally, GAP doesn't just meet, but beats that $0.54 to 55 EPS consensus. And if we had revenue numbers, a beat there would be great too, suggesting stronger demand. But really crucial would be positive commentary on the full-year outlook. Management sounding confident.
Right. Guidance is key.
Absolutely. Seeing that year-over-year EPS improvement continue from Q1, signs of gross margin expanding, good inventory control, all those things would be very positive signals. Especially inventory for a clothing retailer, you don't want stuff sitting around.
Makes sense. And the flip side, what signals trouble? What does the bearish case look like for GAP?
Okay, the bearish case, well, first obvious one is a miss on that EPS consensus. Coming in below $0.54 would not be good, or even if they hit the number, if the guidance they give is cautious, warning about slower sales or margin pressure.
So even a meet could be bad if the outlook is weak.
Precisely. Any signs of margins getting squeezed, maybe comparable sales looking soft, or just, a lack of follow-through on that Q1 improvement, that could definitely push the stock down. Suggest Q1 might have been a blip or headwinds are building.
Okay, so lots to watch there. If you had to pick just one thing for our listeners to focus on when the report drops, what's the absolute make or break element?
Boiling it down, I'd say the key metric has to be the forward guidance. Given how little concrete data we have beforehand, especially on revenue and those other details, what the company says about the future EPS, future margins, that's likely going to be the biggest swing factor. Can they keep up that year-over-year EPS growth we saw in Q1? That's what the market will be dissecting.
Right, forward guidance. Got it. So let's pull it all together then. Taking everything into account, the knowns, the unknowns, what's our overall leaning here? And how confident are we feeling?
Okay, overall leaning, we're sticking with neutral. And on that confidence scale, 1 to 10, we're putting it at a 4.
A 4. Okay, that's definitely on the cautious side. Why so low? What's driving that uncertainty?
It really boils down to what we don't know. Simple as that. Yes, we have the timing. Yes, we have that tight EPS range, 54, 55 cents. And yes, Q1 was a solid beat. But the lack of a verified revenue consensus is a big one. The missing technical data price action, key levels, that's important context we don't have.
And the implied volatility.
Right, not knowing what the options market is pricing in terms of expected move. Plus, no deep dive into margins or segment performance in our sources. All these blind spots, they just limit our ability to really predict an outcome with any strong conviction. So neutral feels like the most responsible stance. It highlights the higher than usual event risk for you, the listener.
Okay, that makes sense. So with that level of uncertainty, how should someone think about actually trading this? Any thoughts for different approaches?
Yeah, good question. For folks who are more risk averse, honestly, probably makes sense to just wait, let the numbers come out, let the guidance drop, see how the market reacts, and then trade the trend that emerges. Avoids all that pre-earnings guesswork.
Sit it out until the dust settles.
Exactly. Now, for those who are more risk tolerant, maybe you still want to play the event. Strategies that define your risk up front. could be considered. Things like option strategies, maybe a straddle or a strangle, which can profit from a big move either way. But here's the catch again. Without that implied volatility data, it's really hard to know if those options are cheap or expensive or how to size the trade properly.
So even the riskier plays have extra complexity this time.
They do. It just adds another layer you need to be aware of.
Got it. Well, that wraps up our look into GAP's upcoming earnings. Hopefully that gives you a clearer picture what to expect, what to watch for, and maybe just as importantly, what we don't know yet.
Yeah, we hope this gives you some valuable context. Remember, understanding the information and what's missing is key. Critical thinking is always your best tool, especially around earnings.
Absolutely. And hey, speaking of looking into things, don't forget if you have a company you want us to tackle in the future, just let us know in the comments below. We always appreciate the suggestions. So maybe something to think about as we sign off. What does it really take for a classic retail brand like GIP to keep adapting and stay profitable in this crazy fast market? And how might we see that story play out in their upcoming guidance? It's a huge challenge.
Thanks for joining us for this Investing Talk podcast. We look forward to having you back for our next one.